Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian, and welcome to the Bull, the Bear, and the Ugly. Wow, what a day. What volatility again. The CPI number came out. They came out at 2.8, a tenth better than expected. Early in the pre-market, the S&P futures shot up, boom, to 56.75. And then at one point, they traded down to 55.50. That's 125 points off the high. And then we rallied from 55.50 all the way up to 56.32, and then dropped another 30 at the end of the day. Just in the combination of all these moves, you're north of over 200 points on the S&P. Insane. Forget about the Nasdaq. The Nasdaq's moving 200, 100 at a clip. It's just insane. And I think the volatility is going to be here for many, many more weeks. There's always like this. There's always, in my history of being in trading, and again, I'm in my 42nd year, come this August 1st. You see periods of this, right? Just about a month and a half ago, we were watching sometimes the S&Ps move maybe 2 or 3 points, 4 points within an hour range here. So again, the volatility is here, but when you have the indexes at such high levels, 5,600. We were at 6,000, 6,100. These are very frothy numbers. It's a lot different if you're trading 1,700, 1,900, 2,500, 3,000 on the S&Ps versus trading at a double the price. So again, volatility's here. We caught some really phenomenal, great patterns today. Again, all off my divergence patterns. I told you, if you could master the art of divergences, you have mastered the art of trading, period. These patterns that I teach each and every day, they repeat themselves. Everything I do in my live stream each and every day is all based upon visualization and repetition. So with that, you could please join my community. Let me help you. I'm helping so many people, guiding you, educating you, teaching you my software, identifying the trades, trading the patterns, being able to identify them, teach you them, and then it's just going to resonate. If you put the work in, I will tell you that you will succeed in this, all right? This is not easy. I understand that. But guess what? If you can master the art of day trading, when they say day trading super hard, nobody can really do it, but we do it here each and every day. And I'm so proud of all the people in my community. My phone blows up at the end of the day. I'm just so happy to hear that people are successful. And that's all that matters to me. All right. So with that, I'm going to go and start and show you. These are the patterns that today were this absolutely amazing. And I'm going to show you the first one here. All right. I'm going to change this to the 60-minute time frame. And this really was probably the pattern that, it was a double buy divergence, When the S&P futures were pushing down at noon right here, you can see the low, 550.25. The first thing I said to myself was, these MACDs are nowhere near making new lows here for today, right? I said, what the heck is going on here? These MACDs aren't making new lows here, right? And then you do this here, okay? You bring up the spiders on the 30-minute. You bring up the spiders on the 60-minute, boom, right here. And you can see the new low here was getting oversold into the positive MACD. The algorithm reversed to buy. So you have a new low here on the 30-minute. A new low here for the day, and the MACDs are positive. There's no way that this low, this was a slingshot up 80 handles. I couldn't believe everything exploded, everything. So not only did you have the pullback, the drop, and the MACDs did not confirm on the continuous contract on the 60-minute. Now you had a double buy divergence. The price was making a new low, and the spiders and on the 30 and 60-minute MACDs were positive, and they did not make a new low. The guy who sold 550.25, he jumped, okay, because they ricocheted all the way up to 46.32, like that. Boom, 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 boom. I didn't even flinch. When they were trading 55 and a quarter, 50 and a quarter, I said they're going to go to 65, 75, 80. Now, I thought they're going to stop at 80 and then drop and then rally, but they just kept on. They pushed up to 90, 95, pulled into 90, and never looked back, and shot from 90 or on the 55, 90 all the way up to 55, 56.32. So it was a unbelievable pattern. This pattern, you see this pattern at times on one or the other, right? The spiders, let's just say, for example, you'll see the new low, right? And the spiders, MACDs are not confirming on the 30 and 60 minute. But this time was so unique that I was like, a double take. I'm like, you got to be kidding me. This 60-minute S&P future is not making a new low on top of the spiders 30 and 60 minute. This is a rarity. This doesn't happen all the time, but it happens. And you have to be able, and I'm teaching everybody to identify that. Couple days in a row, I was able to call significant longs in the market off the continuous contract, and a couple of phenomenal monster shorts in the last couple of days off the continuous contract on the 30 or 60-minute time frame. I'll leave my charts up and running for a reason, so I can visually see things and interpret it and teach people in my community each and every day. But today was a rarity. This is an absolute Picasso. This is like you take a picture of this on the 60-minute and the 30-minute and the 60-minute spiders, and you just frame it right on the wall. This is an absolute, literally, my heart was going like this when I saw this pattern. I'm like, who's selling them down there? But who cares? NVIDIA ran $3. You're talking MSTR ran 12. You're talking Coinbase ran 6 or 7. Avago ran close to 4. Just throw a dart, right? And then you're going to see how everything exploded. So the 12 o'clock pattern was an absolute Picasso. Now let me show you another great pattern today. The 2 o'clock pattern. The QQQs reversed to buy at 1:30. Now, when the QQQs reversed to buy on a 60-minute time frame, it correlated with the 30 and the 15-minute time frame. Absolute Picasso, right? Now everything, you're swimming with the tide. All three time frames are aligned. You went from a buy disconnect, 2 out of 3 are bullish, to all 3 are bullish. What do you look to do? You buy the pullback on the 15-minute time frame. And look what the Qs did here. Look at this pattern on the Qs right here. This is the pullback on the 15-minute time frame. This is the first pullback on the 15 right here. You can see it at 2:15. You see the pullback, positive MACDs on the 60 and the 30-minute time frame. You buy this pullback here. The Qs got down. I'm not saying you got the lows. I'm just showing you where it got down to 475.15, and within 5 bars, well, you can either go 1, 2, 3, 4, 5 bars. The Qs ran 4 points. The Nasdaq futures ran north of 150, close to 200 on that pattern. Unbelievable pattern. S&P futures, on the other hand, okay, on a different pattern. If you look at the 60-minute, the 60-minute did not reverse to buy, but the MACDs are positive. And you got the pullback here on the 15-minute time frame, reversed to buy, and it correlated with its 30-minute. Now you can see the positive MACD here on the 60. So when the 30 is still bullish and the 15 reversed to buy, you have a buy disconnect. You got the pullback right here. We caught this long, 557.81. And again, 1, 2, 3, 4, 5 bars, 557.81. The S&P futures ran 40 handles on that pattern. Unbelievable pattern. Again, the 11:15, and then you got the 2:15 pattern, were patterns that were unbelievable. So many other great patterns today here. We saw Tesla reverse to buy on the 60-minute, 30, and 60-minute time frame. You want to see a Picasso? Look at Tesla. Look at this first pullback. So Tesla reversed to buy here, ding, 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 at 10 o'clock. Then you change the 60-minute. Boom. Here's the 60-minute. Look at the MACD is positive. ADX is off. No big buying or selling pressure. Go back to the 30. MACD positive. So you got some buying pressure. And look at this beautiful pullback on the 15-minute time frame at 11:15. Everything lined up at 11:15. Look at this beautiful pattern. 241.10. Boom. It ran $10, Tesla. Come on. 1, 2, 3, 4, 5, 6, 7 bars, all within my 8-bar range. Remember, I told you that if you're looking at the strategies, whether it's a 5-minute time frame, anywhere from 1 minute up to 40 minutes, right? That's 8 bars. On a 3-minute, 1 minute up to 24, that's 8 bars. On a 15-minute, anywhere from 1 minute to 2 hours. Okay, all right. So what I'm trying on a 30-minute, anywhere from 1 minute up to 4 hours. Okay. So again, look at this pattern. I mean, these patterns repeat themselves, right? And I'm showing you something here. When I see those MACDs from below the pivot, no selling pressure, right? ADXs are off, or even some buying pressure. They reverse to buy on the 30 and the 60. The trade of the day is, and I said it this morning, is going to be the 15-minute pullback. Boom, right there. NVIDIA, perfect. Avago, AMD, monster patterns. And I'll show you AMD next. AMD reverse to buy on the 60-minute time frame right here. I'll show it to AMD. It correlated with the 30 and right here. You correlated on the 30 and the 60-minute time frame. Here's the pullback on the 15. AMD, boom. AMD ran close to $2 here. 1, 2, 3, 4, 5 bars, 6 bars. Phenomenal. NVIDIA, NVDA, reverse to buy on the 60-minute time frame, correlating with the 30 and the 60. AMD, same time, 2:15, 2 o'clock, boom, 1, 2, 3, 4, 5 bars. AMD got down to 144.30, NVIDIA, 144.33, and rallied, look at that, about $1.60. Again, like I said, I'm just showing you how these patterns repeat themselves using my software. Eventually, I'm very close to, hopefully, God willing, one day automating all this and put out the alerts, because I just look at the universe of to me, are the best stocks that I think with the high volume. I love these names. I love trading these same names every single day. I don't really want to just, this is my world, but everybody's different, right? Some people like to trade UNH. Let's look at Netflix today. Monster patterns in Netflix. I have a lot of people who like to trade Netflix. Netflix reversed the buy right here. Yesterday, the 30 minutes already positive. The 30-minute already positive. Here's the 15. We gapped up. Boom. Here's the first pullback. Look at 11:30, 9:01. Boom. 24 points. Second pullback. Boom. 9:11. Right here. Look at that. Another 14. So you can see when you're pushing up, when you're getting overbought into negative MACD, that's a telltale that you really should be looking to exit the longs there. Okay. But again, what my research has shown me, you'll get anywhere from 2 to 3 pullbacks or bounces on the 15-minute time frame. And then you're going to get anywhere between 4 to 6 great trades on the 5-minute time frame. So again, monster day here. Really, I'm going to show you this IONQ. Now, this is a name that got really beaten up, okay, IONQ, but I got to show you this pullback here. Please watch this strategy, okay? We gapped up today at 9:45. This is an absolute, I mean, everything I show you is a Picasso, so you'll have Picassos going throughout your whole house. But look at this, the 15 reverse to buy here at 10 o'clock at 9:45. Look at this. The 10 o'clock, look at the yellow dots into the blue. ADXs are rising from, MACDs are positive from below. You have the ADXs rising, big buying pressure here. And then you have the 60-minute time frame reversing to buy here, right, later on. All right. But here on the 30, you have what's called a buy disconnect because 2 out of 3 are bullish. But when you see a pullback like this right here, please pay attention. Watch this. When you see a pullback like this, positive MACD, rising ADX, big buying pressure, rising MACD positive, rising ADX, and you're oversold on the 15-minute time frame into a positive MACD, that's a positive divergence 1. Oversold into a rising ADX, that's positive divergence number 2. Oversold into some big buying pressure, that's positive divergence number 3. And then look to your left. ADX is rising on 2 out of the 3 time frames, the 15 and the 30. Are you crazy? Look what this thing did. Boom! All the way up. And IONQ. Now, I watched this stock because when it was like 53, 54, I was really shorting the hell out of it up there, right? And it has pretty good volume. But look at this thing. 1973, 1, 2, 3, 4, 5, 6, 7, 8 bars. Not bad. $1.40. Not bad for a $19 stock. And then got another pullback later on and it ran about 50. But when you see these ADXs are rising, right, on the 15 and the 30, the MACDs are positive. The 30 correlated with the 15, you have what's called a buy disconnect, right? So you have a buy divergence and a buy disconnect. Remember my 5 conditions: a trend, a buy reversal, sell reversal, a correlation, and a disconnect. In this strategy right here, you have a buy disconnect, right, with a buy divergence. So all my strategies are predicated on buy and sell divergences. So divergence strategies are all that I look at. That's how I wrote this system. It took me nearly 10 years of my life. I taught this to some of the biggest hedge fund managers, I told you. And one of them said to me, well, how do you figure this out? You know, the good Lord gave me the ability. And now it's my time to be able to teach each and every one of you. I want to see you all kill it. I want to see all of you do extremely well. Again, my legacy depends on your success. All right. So with that, I have a couple more great strategies here to show you. Let's look at Apple. Absolutely cabooshed here. So Apple comes in here at 10:45. The 30 and the 60-minute time frame are already negative, and it correlates right here with the 30 and the 60. What do you look to do? I caught this phenomenal short in Apple right into the 10-bar weighted moving average. Apple 218.61, 2, 3, 4, 5, 6, 7 bars. Apple dropped, look at that, $2.60. So Apple 15-minute time frame reversed to sell. It correlated with the 30 and the 60. The ADX is rising on the 60-minute time frame. Monster selling pressure. You can see here. Look at this monster selling pressure right here. This is the high right here. This is is that the price? No, where is this? Right here, 218.61. Look at the big selling pressure here. Look at the negative MACD, the rising ADX. Where the hell is Apple going? Look at that. That's an absolute, I mean, do I have to say it? A Picasso, right? So again, being able to identify these patterns, and if you look at Apple on the daily, probably getting way overextended. Yeah, this Apple's probably need to be bought here. If you get down to like the 212.5, 215, 211.5, 215.5, just for a bounce up here, and then look another push down. Apple is negative on the weekly. Look at this. When the weekly reversed to sell, look at this. I was watching this Apple. I was calling shorts in this Apple above 248, 249. I saw this. And even if the algorithm reversed to buy on the weekly, look at this negative MACD in Apple. So Apple reversed to sell. And then what you do is you get a bounce here. Boom. You got another bounce. But wait, you see the overbought condition on the weekly. And it just absolutely just dropped. The guy who bought Apple here at 260.10, he jumped. All right. So again, Apple is in a negative trend on the weekly and on the daily, but it doesn't mean you can't get a bounce and then another drop. And eventually, hopefully one day you'll see Apple in some type of, but it may come from a lot lower level. It may go to like the 185, 190, 170 level before the weekly and the daily start reversing to buy again. Okay. All right. What else here? MSTR, a monster long all day. MSTR reversed to buy on a 60-minute time frame. As you can see it right here. What do you look to do? The 60 reverse to buy, it correlated with everything. And here you have it. Here's the first pullback. MSTR pulled in nicely right here, okay, at the 215, 258, and it rallied 7. But you can see the positive MACD. The ADX is off. There's no big buying or selling pressure. So what you have here, when MSTR pulled in here and it got deeply oversold on the 15-minute time frame, look at the oversold condition. Look at the yellow dots. The yellow dots represent the price within the algorithm right here. Okay, got deeply oversold into the positive MACD. ADX is off. No big buying or selling pressure. The 15's oversold. Look at this. Everything lined up at 11.15. Boom, right back up. MSTR, I think it ran 12. Actually ran 15. 1, 2, 3, 4, 5, 6 bars, 5 bars. MSTR ran $15. These patterns are so powerful. I could show you Coinbase. I can show you Avago. I can show you Microsoft, Amazon, phenomenal patterns. What I showed you here on the Qs, the spiders, the divergence patterns, these patterns I show you repeat themselves. And this is what, if you really, really have the passion and you want to learn this is what I teach each and every day in my live stream with my community of traders. And this is how I feel you're going to have a significant impact. You're going to be successful in trading. I live and breathe this every single day. I'm not a psychologist, but guess what? I talk to people all around the world and I listen to them, and I'm trying to help them get better each and every day to be consistent and to be a profitable trader. A lot of people are finding struggles in trading options, and now they're looking at trading futures. To me, it's the best asset class there is, but everybody has to be comfortable and in their own world. Okay. Some people can like to trade stocks and futures. Great. Some people just like to trade options. By law, I can't tell you what to do, but I can tell you futures for me is the greatest asset to trade. Okay. When I come back, I will tell you what I expect for tomorrow. Okay, so tomorrow at 8:30, we have the PPI number that comes out. So, obviously, with the CPI number coming out. Now, normally, when you see a CPI number come out, like we saw today, and it's a tenth better, it's showing that inflation came down from 2.9 to 2.8. They're normally up 100 handles, and they were at one point. They were up at like 97, 98, and they faded. That means that there's a lot of sellers out there, right? So this is not where many times in the past where a great CPI number, changed the whole focus for the next week and they gapped up, they pulled in and just continue to go north, right? Not today, right? Not today. Remember, the big number on the spiders this week, if you close below the 573.42, right now we're at 558.56. Unless something crazy happens Thursday and Friday in 13 hours of trading, the weekly will go negative on the spiders for the first time since September 17th of 2023. I told this to one of the biggest hedge fund managers, and I'm telling you, that is a very big number, which means you probably have several months, couple months, 2, 3, 4, 5 months, maybe whatever, before they base and they go back up probably sometime in the third quarter. And my target is 6,500 for the year end. Okay. However, that big number is going to be very important. Again, for tomorrow, if we do get a push down, we do have big buy divergences here on the on the 30 and 60-minute time frame on the underlying ETFs. So even if we, God forbid, if the PPI number comes in worse than expected, and we push down to new lows, taking out the 55.34, which was yesterday's low. If we take that number out, expect a very sharp snapback, especially off these big buy divergences on the 30 and 60-minute time frame. Again, what's really important here is to be able to identify the patterns. So when I walk through that door each and every day, the first thing I do is I look at all the bigger time frames, the 30-minute, the 60-minute time frames, and I get a feel for everything that's going on. I know Avago, NVIDIA, SMCI, Tesla, all the 30s and 60s are in buy mode. AMD. are in buy mode. The Q spiders on 30, the Qs on the 30 and the 60-minute time frame. So basically, you're already in the mindset that there's underlying strength here, right? So if we do get this pushed down, remember Tesla was trading 215 and then trade up to 252 today at one point. So what we want to be able to do is when you come in, have the mindset of exactly knowing where everything is. Wait for the market to wait for the 830 number, let the dust settle, and then we go from there. So I'm expecting if we do get a push up tomorrow, okay, and the spiders reverse to buy on the 30-minute time, on the 60-minute time frame, taking out the 562.61, 562.71. If the spiders take out on the 60-minute time frame a close above the 562.71, that means we're probably right now about 370. That means they have to close above 38, 56.38 on the S&P. The 60-minute time frame will reverse to buy on the spiders, and then I would look for buy pullbacks. And then today's low of 55.50 in the quarter should not be touched. If we do get a push down tomorrow from this PPI number, I'll look for deep oversold conditions on the 30 and 60-minute time frame and look to buy them, and hopefully that these buy divergences will stop the decline and then get some type of rally. All right. So when I come back, another great story that I have to share with you from one of my traders in my community. So this morning I got up and I reached out to, I saw the S&Ps up strongly, and this person's, living in another country. And I just said to the person, how you doing? I'm sure there were some really great patterns on the continuous contracts, on the futures contracts during the European session. And he said, yeah, there was a really great pattern around the 6:45 time period. So when I got here around 7 o'clock in the morning, I looked and I saw this beautiful, beautiful pattern on the S&P futures on the 15-minute time frame. It pulled in beautifully into a positive MACD, rising ADX, big buying pressure. And I'm like, this is a Picasso. And I looked at it and I saw it, and it was right here. S&Ps was trading 56.07. And if you just look here, they ran 20 points in literally from 1, 2, 3, 4 bars, 5 bars. So basically, the S&Ps ran in 25 minutes, 20 points. I said, wow, this is a great pattern. I hope you caught this pattern, right? And the person said, no, unfortunately, no. I was just thinking the MACDs were negative on the 5-minute time frame. I'm like, stop. I got to stop. I said, when you look at your conditions in the market, the 15 to 30 and the hourly, and this example, this was a buy disconnect with a buy divergence, meaning the 15-minute and the 60-minute time frame were bullish on the S&P futures. The 30 was still negative on indicator 4. So I said, why would you not want to buy this pattern? This is a phenomenal pattern. And he said, well, I was looking at the 5-minute MACD. No, the way you look at it, you look at indicator 4 first, the MACD second, indicator 2, indicator 3, the overbought oversold oscillator, number 3, and indicator 2 is my number 4. And I said, you have an oversold condition in a positive MACD, that's a positive divergence 1. Oversold into a rising ADX, boom, positive divergence number 2. Oversold into some good buying pressure on the 15-minute time frame, positive divergence number 3. And if you look here, and I'll show you the yellow dots, which represent the price within the algorithm, were nowhere near and looking like they were going to reverse to sell negative. So you can see they were pretty solid. So I said, I'm just curious, why would you buy this? And the person replied back, well, because of the negative MACD on the 5. I'm like, that's not the way to look at it. You have to look at the bigger time frame and what that bigger time frame told you. Once the algorithm reversed to buy and look to buy some pullbacks on the 5, but the bigger picture is the pullback on the 15. And then he said, well, I was, thinking and this and that. This is the bottom line. When you're trading, okay, it has to be natural, right? My friend used to say to me all the time, you have to have unconscious ability, right? And and he taught me this a couple of weeks ago. I have unconscious ability. Like, I don't even want to think. I just see it and you trade them. That's it, right? And I've been doing this for 41 plus years. But there's an old saying by a famous football coach of the Pittsburgh Steelers who won 4 Super Bowls. And he said, when you think, you stink, right? Stop overthinking. See the pattern. Identify the pattern. Don't start thinking about the 5-minute NACD and look at this. And he actually pointed it out to me. He said the 15-minute time frame set up beautifully, but I was looking at the 5-minute MACD. Okay, well, that's not the strategy. The strategy is the 15 reverse the buy. It correlated with the 60. You have a buy disconnect. You buy the first pullback on the 5 and the second pullback on the 15. That's the strategy. So my lesson for today to each and every one of you is don't overthink, right? When you see it, be confident. Be confident. Okay, one of my 5 keywords, confidence, right? I built this system to give me the ability to have the confidence to trade, to be able to see visually where the market's going, to identify the strategies, to be able to go cha-ching and trade the pattern with confidence, right? So don't overthink, have unconscious ability, right? Be able to trade what you see. All right, I'm Steve Kalayjian. Thank you so much for joining me today on The Bull, the Bear, and the Ugly. Also, please, I launched my new website, sktrading.live. Please follow me on X at Steve Kalayjian and subscribe, and please leave a comment and join my community. Each and every day I stream from 9 to 4. My cell number is 914-500-7484. God bless you. God bless the United States of America. Be well, everybody.
Thanks for tuning into The Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.